Alrighty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Oh wait, my picture's not up here. Sorry, I got my do-rag on today. Brother need to get braided up this weekend, so my braids looking kind of raggedy, but you try to keep them in there for about 3 weeks. So I'm trying to hold on. I'm holding on for dear life. You know what I mean? But anyway, what's going on, everybody? Welcome back to another edition of Market Review with me, T. Hobbs. Today, as per usual, we're going to be breaking down the S&P 500, the Dow Jones, the NASDAQ, and we're going to take a look at the volatility index. Tomorrow is Liberation Day. Still don't know what the hell we're getting liberated from, but it's not going to change anything that we normally fucking do, right? If we trade market structure, we trade time, it's not going to change just because there's a certain day called Liberation Day. The structure is still going to be a structure no matter what's going on. So that's our job. And it's my job here in the trader shop to review that price action. So let's get right into the action. So if you come over here, let me move this camera so you guys can see. I guess that's good. All right, that'll work. All right. So if you come over here, our macro plan, right? Which I always tell you guys is probably the most important thing that we do, right? Because it gives you the context of the market, right? The current conditions at the time we were trading down. So I said we're trading bearishly. It's a bearish retrace of a bullish trend because as long as the low at 53.35 or 53.33.75, which I forgot a 3, as long as that holds, right, we're bullish. As long as the high up here, because this is the dealing range at 79, 57.79, 50 holds, we're bearish. So the closer we get to this high up here, the more bearish I am. The closer we get to this low, the more bullish I become. It's that simple, right? Right now, we're in the middle of those two levels, but we're still on the discount side because we're below the weekly fib. So I'm looking for longs, right? Doesn't mean that's the only thing I'm doing, but it kind of does with the way that I trade, right? So bulls, as expected yesterday, defended August 5th's low. They still have a ton of room to the upside, right? And we'll need to, oh yeah, I got braids. I forgot to tell you, I got some braids, man. I got some braids. You got to go back and watch the market reviews, man. I showed y'all a couple times. I actually turned my camera on, but you always be in here for them, so you really don't have no reason to watch. But anyway, they still have a ton of room to the upside and will need to keep yesterday's lows intact. As this is Tuesday, I expect the high or the low of the week to be placed. So I will look to continue trading in the uptrend as long as buyers can take out the previous day low, right? If not, we will place a high of the week and continue down past 55.17. And if you guys go look at the shop trade ideas, you go look in the stock VC, you'll see that I stuck to this, right? Like I didn't take any shorts, right? Like I'm trying to practice just like doing exactly what I say. That's it, right? I don't give a fuck about nothing else. Like if the market going short, call me when we come down for the longs. That's it. Until that changes, right? Until the macro structure changes, or i.e. we get above the weekly fib, then we'll talk, okay? But anyway, what levels were we looking for? The PM session range was very important. As you can see, the market did nothing but trade inside of the PM session range. The low, 56.1750 to 55.8350. Well, the low of the day was 5,600. I'm pretty sure that's between these two levels, right? But, just the guy, right? Anyway, the high, 56.72 to 56.4850. Well, 56.72 was the previous day high. It's exactly where we closed today at 56.72, right? Which lines up with our chessboard here. See, our extreme low was the in-walk down here, never got tested, right? I also said in the pre-market prep, I specifically said, hey, I don't have this in-walk on my chart, but this is an in-wall right here. I didn't have this during the trading day, but I said, hey, there's an in-wall right here, right in the middle of the chessboard at 56.0275, and the low of the day was 5600.25. So again, yesterday, the low of the day was 55.3375, right off this in-wall, and then we got above this in-wall, and then they literally did the same thing. They retested the in-wall, right? And the low of the day was the in-wall. So if you don't understand INWALs, there's a video in the Discord specifically talking about INWALs. It's named INWALs, okay? So if you need to search for it, go look at it. Because I'm telling you, these levels will always be important because they're weekly levels, right? So if you see the market come down to a weekly level and a daily level, because it was daily fib and weekly and the INWAL, like they were literally sitting right on top of each other, it's probably a good idea to get long down there. I'm just, just throwing that out there. All right, anyway, so let me get off of my my shit talking horse and come down to the 15-minute, right? We'll take a look at price. This is important, right? It's important. One, first thing I look at, I trade London and New York. So I look at the 550 macro. That's when I start trading London, right? So I took shorts. I took one short here. I was pissed off, got out too early, and then I re-entered in the consolidation. And then I got, I got kudos. I was happy, right? And then I ended up taking longs in New York, right? I took longs in New York. I got in a little too early, 9:30, right? I did exactly what I wanted to do, right? The market traded down into 9:30, right? I'll go to the 1 minute so you guys can see a little better, right? But the market traded down into 9:20, 9:30. I took longs off this double bottom right here, right? So I took it 3 times. It's just crazy when you think about this because I really could have just stayed in the same trade and added to it. But I was in heavier side, so I was a little nervous if I'm being honest. But as soon as we traded down, I got long 56.29, right? Remember that number because it's about the same damn level that I got long last time. It's kind of crazy. But anyway, 56.29, I got long here. I got out of 10 contracts at the 40s, right? Came back down and I got out of the last 2 somewhere in the 30s somewhere. I don't know. I got stopped out. Then I got back in too early right here because I thought this was a double bottom at 56.28. And I got stopped out for a 2-point loss at 56.26. Market rallied back up. I got back in on this side of price, right back in at 29. So I took a win. I took a loss. I got back in at 29, right, with 20 micros. Rolled the market up, got out for 10 at 20 points, right? I got out at 49 or something like that. Yeah, I got out up here, basically at the high, and then I put the rest of them in profit. When I came back, I got stopped out in profit because I thought we was going to make the rally that we ended up making at the end of the day. I thought we were going to do it right away here. So anyway, after I got stopped out in profit, I came back. I switched from my funded account to my combines, and I got long again, 56.17 right here into this little cluster here. Traded down into 9. The reason was we traded down into 950. Number one. Number two, there was a level here that I talked about in addition to the chessboard being here, right? I talked about this level right here. I said, hey, there's a fair value gap right here, right? Now the gap is obviously above us, right? It's from here to here, but the market likes to tap, it likes to mitigate the gap, right? So it likes to push down into the gap. So you can mark it from here to here. I just like to mark it like a supplier demand zone, right? So I told the Discord, I said, hey, watch out for this fair value gap to get closed. If we liquidate into this fair value gap, it should cause a massive reaction. That's why I didn't hesitate, even though I would prefer to get the entry down here to 5600s. I wasn't here for that. So when I came back, I was like, okay, this looks like a good setup. I'll take it at 56.17, but my stop loss was a 17-point stop loss, just so you guys know. Right? I was risking 17 points on this trade, right? It was a fairly large stop loss, but I could afford it. So I said, okay, I'll take it with 10 contracts, right? And we ended up taking this thing all the way up. I think I got out for like 40 something points. So I still ended up getting a 3-1, right? Like the stop loss was a large, but I knew the expected move was going to be larger, right? The expected move in my book was at least to the previous day high. That was 55 points, right? And we ended up moving from that level. From my entry, we moved 76 points. So in the grand scheme of things, did that entry really matter, or did it matter more that I was in the move, right? Like it mattered to me more that I was in the move, right? So that was the second trade I took. And then on this side of price, I faded the shorts. I went, did some other shit because I was like, I'm not shorting the market. I don't care what it does. Then when we came down here, I knew that I had this yellow box drawn. I was looking for a fair value gap, right? This was the first fair value gap of the day. I wanted the market to come back into this level. I said it when we were up here. I said, you guys can short this. I think it's a good short. So I'm not getting into the shorts because I hate the way they move. So I'm looking for price to get back below midnight at 56.33, right, to 56.22. Now, if you guys have been trading with Top Step lately, I promise you their fills have been absolute trash, right? So when the market came to 33, I hit the buy button. I didn't get filled until like 35, okay? So I was literally in drawdown this entire trade. My stop was behind here for 12 points. So I was risking like 300 bucks. I took a loss on this trade because I moved my stop up. Because I just literally was sitting here watching this consolidation. I was in drawdown the entire time. And I was like, man, if it come down here, it's probably going to take me out. Psychology, psyching myself out of the trade. Not realizing that we're trading down into 250, which is exactly what I want. And I literally moved my stop to about 56.27. And I got stopped out immediately for a $200 and something loss. So I was like, well, I'm not going to let price leave here because I still think it's good. So I ended up re-entering the position at 56.29. This is why I giggled, because this was the same exact entry that I got on the other side of price this morning, right? So literally the exact same entry at 56.29 is the same entry I took at 250. I rode this up all the way into this highs up, or I don't know, whatever it was. I needed to make $800 or something like that. And I did it with 5 micros. So it was a lot of fucking points, but I needed to make 800 bucks to hit the requirement for the day on the Combine account. So I did that. But ultimately, those were all of my trades. Now let's go back to reviewing price. So if we go back over here, 929.30, we double bottomed, right? The thing that I missed, right? And these are the mistakes. The wins are cool, but the mistakes that I made, number one, we were in the middle of price, right? So even though this 929.30 move was a good move, we were still in the middle of price. It's something I try to avoid in my trading, but the way I justified it was we had this cluster from 750 here. I thought we were going to get a continuation back to the upside. We were below midnight, so that was a check. We were trading down into 930. That was a check, right? So I had my where, when, and why. This is a good trade. I'm not going to be upset with this trade. But where did it go to? We traded up in the 950. This is where I should have immediately got out of my trade. I should have respected the macro and allowed price to trade down and give me the real entry that I wanted all morning. Because once we traded down into 950, if you guys go back and look at the price action yesterday, all they did was move the macro, the time where they reversed the market or retraced the market. Yesterday, they did this play around thing at the low in after the 930 opening price. And then we just took off, but we were already at the low. Today, we started in the middle of price and we hadn't made it to the low. So they danced around in the middle of price, rode it up, the manipulation, and then we got the expansion to the downside, but we got the same setup down here at the lows that we got yesterday at 948, I believe it was. Now, we came down here and I wanted to point out that when we came down here, this candle, right? You're looking at these 1 minute candles. The 1 hour looks so fucking bearish. And I had to apologize to one of our Discord members because I think I talked her out of, I shouldn't be able to do that anyway, but I'm pretty sure I talked her out of taking this trade. Because when I tell you this was the motherfucking setup of the year, right? There was an in-walk here, right? That I showed you guys in the beginning. There was an in-walk here. The daily fib was here, right? This was a fair value gap from yesterday. This was PM session low. We were below midnight. We were below London. We were below previous day high, below weekly fib. Like, need I go on? And we were trading down inside of the 950 macro. When I tell you there is no better A+ setup than this, when you see this, take this trade every time. Eyes closed, blinded, right? With max contract size, right? And just, you know, hold your breath and it'll be out of there in no time because it's going to bounce fast, right? She didn't take it. I actually took it. You know, shame on her, kudos to me, right? But we traded down into 1025, right? And then rallied up, right? We came back in, right? And for those that I know, talking to Jay, he was saying that he was struggling to get these entries after the market starts to rally. Well, listen to this nugget. Use time, right, to get inside of retracements, right? So if you see the market rallying, right, I don't trade continuation, but I'm trying to give you a little nugget, right? I just don't like it. I'm not a fan. But if you see the market coming into the 1050 or 1020, 1050 macro, right, and we're trading down or we're consolidating into it, take the long right at 1050 and risk the manipulation. If you're wrong by a couple of points, but if you're right, you can ride this up into 1110, right, the close of the 1 hour candle. And then you can look for shorts inside of this. But 1125, we trade down, we consolidate. right? And this is the trade Yoga was very interested in. And, shout out to her because she took it short at 56.87, which is a great entry, right? Right at the top of that macro, right? And if we go to the 5-minute, there was some entry criteria that I use a lot inside the Discord. I love my doji candles at the top of trend. I love them. I love them even more when they get swept and they create more doji candles, right? So we had this doji candle at 12. We had another one at 12.05. We swept it and created another one at 12.10. And then we swept that one and created another one at 12.15. Usually when I start to see multiple doji candles all at the top of trends, we're coming down. And then started to push down. So she only had to sit through, I don't know, like 8 points of drawdown. It wasn't nothing crazy. Like 8 points. Great trade, in my opinion. I would have added up there. I'm just kidding. I'd have cut that shit for like 2 or 3 points. But ultimately, what did we get, right? If we follow time, price, and structure, right? Like the market was in here making this consolidation. And I told her, I said, you see this low break here, right? Now, since the lows broke, you anticipate a run on these highs at 56.83, and you're looking to short everything above this high, right? You can short it inside the macro, you can short it outside the macro, don't matter. It's gonna be dropping soon, right? At some point is the point, right? Then we trade down into 12.25, right? You anticipate a rally, a push down brings a rally up, but if that rally up does not take out the swing high, now we go back to structure, right? Our structure tells us if we break a low, right, we come back into 50%, give or take, of the previous low and the previous high. This is the previous low, this is the previous high. There's your 50%, there's your 70%, there's your 50%. Here's your golden pocket right there. Market rallies inside of your golden pocket, hits our data projection that we wrote on Sunday at 56.77. Probably a coincidence, nothing's too crazy. But anyway, we reject that level, come down into 110. Now the market's still coming down, because if the market was going to go reverse inside of the PM session, let me tell you something. It's probably going to be closer to the low than right here still at these highs. And when I say the high and the low, take a fib from the low to the high, the low of the day to the high of the day, and it will tell you where the middle is. The market loves 50%, right? So we take this, right? And this is why I was so very much interested in the longs, right? You take this is 30, this is 50, this is 70. The market runs through 50 because we're not inside the macro, right? Hold on. It runs through 50 because there's nothing here. There's no macro here. So it runs down to 70, finally starts to bottom out a little bit, breaks the high, and then sweeps the low. Now it's time to get long. Why? Because it's time to get long. It's the 250. I know these aren't macros, Pips. Don't at me, bro. But the close of the 1 hour candle acts like, delivers the same way that I look at macros, right? But we trade down into 250 and then we rally up into 310. And it was just all she wrote. Like I said, I took this trade 5 micros just to kind of close out my day. And it was beautiful. It was beautiful. Beautiful trade. A little tough to hold because it was really sketchy on the way up, but it is what it is, right? All right, so let's move over to the Dow Jones, in which I did not write a pre-market plan for, and moving forward in the future, for those that watch the pre-market or the market review, I will not be writing any more plans for any instruments unless I am trading them. I will, as usual, make or chart it every single day. I will chart it. And if you guys ask, I will go over it verbally in the Discord, and I will take pictures of my levels and post them in the chart request section. But you have to ask. Closed mouth don't get fed. And I'm trying to build more. I'm trying to build traders that independently can do all the things that I can do, right? Even if that's not the way you trade, cool. That's cool. I'm not trying to make you like me. I'm just saying I want you to be independent, right? And I feel like if I keep doing it for you, you ain't gonna have no desire to do it yourself, right? So anyway, but I discussed my pre-market plan at the request of Mike, right? Pre-market plan, we're looking to trade the highs and lows of the white box. We're looking to get long. The lower white box, we're looking to get long. The top box, we're looking to get short. That's exactly what the market did all day. And then I marked out, I don't know if we marked this out. I think we marked this out intraday. I didn't really see this until we went and reviewed it intraday. But there was a fair value gap here on the 1 hour, right? Right above the end wall, right? So I said it makes sense that we traded below the chessboard to go back up because we had to tap into the fair value gap. Now, things to note. on the close of this price action, because the Dow, I believe, is telling us a story, right? Usually when 1 o'clock price brings the low of the PM session, right, and 3 o'clock price takes out 1 o'clock's price, it means that we're going higher. Well, on the Dow Jones, we didn't do that. 1 o'clock price is right here. It brought the high, and now 3 p.m. is bringing the low. That's a sign that we could be going down. Second sign, we broke this intermediate low, right? And we went back up and we did not take out the high from yesterday. That's a very, very, very suspect sign that today might have been a double top on the Dow and we could have put in the high of the week. So just be careful moving forward, right? The Dow is the only instrument that got close to the weekly fib too. Things to note, right? Moving forward, right? Like, although we've been mad bullish, we're still very, 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 very bearish, okay? So just little nuggets to note on the Dow. We come down to about the 5 minute and we follow price inside of our macro time. And we can see that the Dow delivered the same way everything has been delivering since we've been talking about macro time. It was the best invention that, you know, Pip could have came in here and dropped on us. Beautiful blessing, right? We traded down at 930, easy money straight up. You could scout that, or you could get with the program and go short. Me personally, I would just let this thing come down because I'm looking to try to long this shit, right? We get back into the 1 hour fair value gap, easy long off 41,782. Trade up into the 1025 created macro by me, create a doji right there, easy money, push back up, push in the 1050 right to the top of the fucking chessboard. Couldn't have drawn it up any better. Consolidated at the highs, broke the lows, came back within 50% of the previous low, which is here, right? This is the low that we broke, right? We take 50% previous low, previous high, right there, golden pocket, even better, right at 50%, right? And then it's just night time, right? Push straight down where? Back into the PM session low, right at 230, get a nice rally off 230, pushing right back into the PM session high. I'm telling you, when I tell you guys the market does the same shit every day, all you got to do is draw 2 boxes and you could go prove it to yourself, right? Go draw 2 boxes, you know what I mean? And go back test a few days, a few years of price action. And I'm telling you, 80 to 90% of the time, this shit's gonna do the same shit every single day. Now, NASDAQ was a little different, right? Same shit, but it just delivered differently, right? Still had the same fair value gap off the 5 minute, right? First fair value gap of the day, right? You see that right inside of the 1025, 1045 macro. Shout out to Pip and Valdez for putting us on. But more importantly, these NWOGs is sauce, right? Let's just pause for a second and realize 2 days in a row, the NWOG was the low of the day on 2 different instruments. Coincidence? I think not, right? We come down in the 1020, 19,268.25 was the NWOG. The low of the day today was 19,261.25. So within 7 points, I mean, come on, man. If you ain't marking these levels, bro, like just, oh my God. I'm praying for you. If you're not marking these levels, I'm just gonna pray for you because your life can be so much easier. It can be so much easier if you just understand where the market is going, right? If you just understand and trust where the market is going, you'll be in so much better shape. Anyway, we had low of the range down here, low of the PM session. We had the daily fib. We had the NWOG. We were below midnight. We were below previous day. We were below weekly fib. We were below New York open. Long. Take the market long, right? Valdez caught a body down here. I think he's the only person to trade the NASDAQ now. But yeah, so ultimately, if you guys are struggling with this, man, I don't want to sound like a dick, right? Like I really want to help, but I got to know if you're struggling, right? I really want to help because I want everybody to win, but I got to know if you're struggling. And more importantly, if you're struggling, you got to admit that you're struggling, right? So we can move past the struggling part and work on the work, right? So just focus, man. Like I said, the market is the only difference between the NASDAQ and the ES and Dow is that the NASDAQ did trade above 1 p.m. price. So it'd be interesting to see what Tokyo does to either trade us back down, consolidate us, or whatever, right? So looking at the volatility index, we should be able to get a little bit more answers. So we look at the 4 hour, right here. And we can see we're consolidating. We manipulated the highs, and now we're looking like we're pressing down to the lows, which is a sign that the market may want to close this fair value gap right here, right? So we got a 4 hour fair value gap right here. So I'm gonna draw this and just leave it on my chart and see how we react to it. Because again, we're still in an uptrend. Uptrend is still intact, but we're on the other side of the downtrend. But because we got above this high right here, as long as these lows down here stay in place, we should be still on the bullish side. So you want to see a retracement back into the 19s, the 20s. And again, you want to hold above 17. But if we can get a retracement into this fair value gap tomorrow, then we can go low, we can go back down, right? So we'll see what happens. I'll be watching both of them. If you guys have any questions about it, I'll definitely put you on the game. That being said, my name is T. Hobbs. This is the Market Review, and I'll catch you guys on the next one, man. Peace.